This is Nerd Stock Talk, where we nerds talking to other nerds on the joys of investing and making it accessible to a lot of people. I have with us a couple of longtime friends. I think that they've known me for well over 30 years or so. JP Wildman and Michael James is here, and and we're here to we're going to talk about. There was some pretty big news that happened this past week, and it's probably going to still be news this coming week, and that is GameStop stock was going crazy, go nuts this past week. So we'll jump right into it. We'll talk about it, and then we'll talk about some of our stock tips and some of the things that we might think about in investing in the weeks to come, or anything we're thinking about selling. And so first, JP, do you just want to first start off? So which one of you guys been following? You both have been following GameStop pretty substantially this past week, correct?
Yeah, JP's been at it a little longer than me, though.
I started buying GameStop in September. These rumors of this happening have been going around since the summertime or so, I guess, is when I first started hearing about it. And I've been buying and selling along the way, sort of giving up, thinking that this was never going to happen and I'm going to lose my shirt. And so I'd buy in and I'd sell, and I'd kind of give up on it and forget about it, and then notice that the price had gone up, 10% or so, and right. I'd buy back into the hype. You can kind of see the peaks and the valleys there. So I started I bought a few calls just because a call option is a lot less expensive, or was a lot less expensive, than buying the shares and holding the shares and tying up my capital that way. So that's right. What I did.
So talk a bit about, like last week, one share of GameStop was about $37.
Last week, yeah.
Last week, around Monday, and now it's jumped up to $64 per share.
And to put that into perspective, back in Thanksgiving time, end of November, GameStop was something like $16 a share, if I remember correctly.
Jeez Louise. Okay. Yeah.
Yeah.
Yeah, and if we'll pull that up on the last 3 months. I'll share the screen again. So this is basically in the last 3 months. You can see that line. It went up substantially. So in December, you're looking at, it was like $15 a share.
Yeah.
In the beginning of December, and now it's at 65. So
I sold about there. I think it was the second week of December, probably 7th or 8th or so. And I made some money, and I was very, very happy, and I thought this was over. Just where I am.
Only.
So, I mean, we're going to give some. We're going to give some tips later on the show. But so what happened? Why did this jump up so high? And is this something that can we predict for any other stocks that are fairly low now that could be jumping up? What happened here?
Yeah, so what happened was, and this is really easy to understand, as everything is in the stock market, is GameStop is fundamentally a terrible company.
Wow.
So they're closing stores quarter by quarter. Their profits are going down. Their sales are going down. They're not meeting expectations, and this has been going on for 2 or 3 years. They're suffering the fate of every major brick and mortar retailer. On top of that, you've got online gaming and streaming games, and nobody's going into a video game store right now. There's a pandemic going on. Why would you go to the video game store when you can just download the game? So because of all that, investors have been shorting GameStop. And what that means is they're buying a contract to sell other investors shares of this company at today's price in the hopes that it'll be lower and they'll make some money. So when the contract expires, if I sell you a put on GameStop for next week at $70 a share, I'm hoping that the share price is $50 and you're stuck buying it for $70 and I'm making $20 a share.
Okay.
Where things start to go wacky is when the share price is higher than the short sellers expect it to be, because then they have to buy those shares. Now, if the share price is going up, that usually means that people are buying the share to begin with. There gets to be this point where there are more shares sold short than there are shares on the market, which causes a demand because the short sellers have to buy the shares. So in order to fulfill those contracts, they have to buy the shares. And meanwhile, there's this other group of people who think the stock is going to go up, who are also buying the shares, which creates a shortage, which causes the price to rocket. And that's what we're seeing going on now.
So there was a halt, right? There was on Friday, they put a halt on the GameStop 3 times.
Yeah. Well, so that's not a scary thing at all, right? So if we, what happened is on the New York Stock Exchange back in, after the 2008, debacle with the stock market when everything dropped like a rock, the New York Stock Exchange put in some policies to limit that sort of thing. It's called limit up, limit down. So basically, any security, it could be a stock, it could be a bond, it could be an option, it could be anything. If any of those things, there are a bunch of rules around it. And I think that in reading about it, so you can, Barn, if you could let me share my screen. Can I do that? I just do share my screen.
Yep, just put it on there. Yep. And as you're doing that, so what's your prediction, JP, on the for next week with GameStop?
Well, here's the thing: this is where GameStop gets really, really interesting. We're at a point in the stock market today where the average person is able to invest. Right. That's why this show is here, because you've got these apps, you can trade for free. There's no commission involved. You can buy and sell stocks and make as little as 50 cents in day trade with no commission fees. So everybody's pouring money into the market, which is changing the dynamics of how things work a little bit. And we're seeing that here with GameStop. What happened with GameStop is not the short squeeze scenario last Friday that I had described. GameStop is still yet to feel that squeeze scenario. What happened on Friday was actually called a gamma squeeze. And a gamma squeeze happens when there are just as many puts expiring as there are calls. So there's buys and there's sells all coming due at once, which is creating a huge flurry of volume. And also driving the price up. So folks are buying more calls than they are puts. And on top of that, it's an environment where there aren't enough shares to even satisfy the retail investors just looking to buy and hold the stock. As far as the research I've done, this is the first time this has ever happened. This is a very weird situation with GameStop in that it's experiencing an infinite short squeeze and a gamma squeeze at the same time, which has the potential to send the stock 100,000% higher than it was a month ago.
Crazy. It's crazy. It's Powerball, right? I mean, come on.
So Mike, so you want to talk about just real quick what that is? What are you talking about? A limit up, limit down?
Yeah, so this limit up, limit down, there are these what are called breaks put on not only the entire exchange, but also on the market in general, on each individual stock. So if it goes up or down too much over the course of 5 minutes, it automatically halts in trading. Like we don't do this anymore. We're done. And this means that people can calm down a little bit. Right? Like people can be like, oh, we're buying like crazy and all this stuff's going on. And for people who are holding while a bunch of people are trying to buy, and you just sit there watching it go tick 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 to like really high, and you're just kind of going, oh my goodness, this is nuts. And then they go ahead and halt trading. And if you don't know what's going on, right? So if you don't know that this is just a standard thing, then you freak out. It's like all of a sudden, oh, what's going on? Why isn't my ticker working? Or like, oh my gosh, there's bad things happening. I should probably sell everything. Right. And actually on Friday, GameStop did this limit up, limit down 3 times, which is bonkers. There's just so much crazy stuff with it. Now, I think that at the moment, it's, JP's right. Like, their current model is unsustainable. I mean, nobody goes to the mall to buy a video game anymore.
Right.
I mean, I got my first console in years, a couple of years back, and I was like, wait a minute, I don't need to go buy games. I can just, there's a thing here, and I just click a button and it downloads. It's like, hey, this is great. But that kills GameStop for two reasons, right? GameStop's primary business is, of course, selling new video games. Secondary, they buy used video games and resell them. Well, just like the same thing kind of happened in the paper book market, where you used to be able to go to a bookstore, you buy a book, and then when you were done with it, you'd go to a different bookstore and you'd sell the book for a little bit of cash, and you could buy lower priced books. But with Kindle, you can't do that. Right? It's the same with digital games. You can't resell the digital rights to use something. Most of the time, it doesn't work.
So do you see what's happening with GameStop this past week, and you predict, so do you see this stock going up higher in this upcoming week as well?
Yeah, I think it's going to go through the roof. Through the stratosphere. It's going to launch.
This is catching the attention of the SEC, and one of the things that's been driving this short squeeze is all things being the same. These short sellers probably would have made money, but some folks on a forum on Reddit called Wall Street Bets decided they were going to have some faith in GameStop, and some new CEO joined the board, some new board members. They have a reputation for really turning companies around. That sentiment caused the buying spree, which has been eating up all the available float shares, which has caused the short squeeze. There's more shares being shorted than there are available to buy right now.
So that's kind of why I think that GameStop is actually a pretty darn good long-term bet too. I think that this guy, his name is Andrew Cohen. He was the co-founder of the Chewy company. This is like dog treats, right? So, I mean, how much of a growth market is in dog treats, especially with a market that's so saturated? He made this dog treat company into this billion-dollar company that was acquired. GameStop's got a lot of real estate.
I don't have any opinion on the long-term prospects of GameStop. My goal with GameStop is to ride this bubble and try to get out on the top and then run away.
Sure, and I'm going to do that too. I just probably won't run away. I'll probably not run fully away, because I think that after this squeeze, we're going to see a huge drop. It's gonna peak for a quick minute, and then it's going to drop back down. I'll probably buy in because I think it'll drop as low. It'll probably be down below 20 again. And I'll probably buy some for a super long hold and hold on to it, because I really think that, one of the things that the gaming industry is missing is a strong online. The Amazon of gaming needs to happen, and I think that Cohen can do that if they listen to him. Right? They may not listen to him, which is why I'm not going to dump everything into it. But because he's not the CEO, he's on the board. His firm has 3 board seats. So yeah, it'll be interesting.
So, but what about so my question for you as well is that you're looking at right now, one share is worth $65 as of today, and to be clear, the stock markets they don't work on the weekend, so that's frozen right now. And what if we have some of our listeners and viewers saying, I don't have $65? Is there a way to buy put $5 in this, or is there how would somebody do that?
Depending on your brokerage, you can buy as little as $1 if your brokerage enables fractional shares, which I believe Robinhood will. If you have a $10 bill, you could buy $10 worth of this GameStop's stock, which is very difficult to say.
And let's call it GME. Let's call it GME. you than
And
GameStop.
100,000% gain is 100,000%. Whether it's $10 or $10,000 you're putting in at first. So,
Right.
Just because you don't have $60,000 to buy 100 shares doesn't mean you can't make some profits on this.
Right. Yeah. Yeah. And so are we like basically through, because I mean we listened to the news and stuff with this past years, like with the pandemic, there's just been such a big pull with millennials and Gen Zers and Gen Xers are kind of been flocking to investing over this past year. And this is kind of, as you said, Robinhood, some of these other really kind of changed the platform for investing. It's made it so accessible for anyone. Do you see what we're living through right now in this next week and a half, what's happening with GameStop as a blip, as a historical like marker to say for like the stock market, if for the financial historians here, or is this going to be happening more and more often?
This is an event of historic proportions, and I would not be surprised if the regulatory landscape gets changed after this is over, if it's even allowed to fully happen. This is unprecedented. The closest that this has ever happened to was Volkswagen in 2008, in October of 2008. They went through a short squeeze, and they briefly rose, I think it was 2,500%. And for one small window of time, Volkswagen was the most valuable company on the planet.
Yeah.
A bunch of people who were shorting the stock lost a bunch of money, including investment banks such as Goldman Sachs and Morgan Stanley, who then, if you remember right, completely collapsed. I'm not saying that the Volkswagen short squeeze was the reason they collapsed, but I am saying that they certainly contributed. That squeeze certainly contributed to that.
Yeah, I mean, and I think that yes, it's historic, and I mean, I'm not going to make the call because I know, like, in the future they're going to be like, that Michael James guy said that the market was going to collapse, and then it did. Burn the witch. No, but it very well could be the harbinger of the next big sort of stock market crash or recession. And quite frankly, I think that at the moment the stock market's living on borrowed time. With the pandemic, I mean, for future people who are eventually going to watch this, maybe, like, we're in the middle of the COVID-19 pandemic, people are losing their jobs and not leaving the house, yet the stock market's on this record run. Like, this makes no sense. Like, how is this happening, right? Yeah. So I think we're up for a big crash sometime real soon, and this might be like the last hurrah, ride this wave until it.
I was going to say, but there's always, like the stock markets are always future oriented. They're not reactionary. They're always looking at what's going to be happening in the future. But then again, too, if you think about it as well, there's other things to invest in, and is like, I mean, we'll probably talk about our future episode about Bitcoin and some of these other things. But what do you think then, JP, to what Michael just mentioned?
Well, I agree. Using historical references and past experiences, the stock market is probably going to crash any day. But when you add into the mix the amount of retail investors that have entered the market through apps like Robinhood and TD Ameritrade that are commission free and have made it super accessible for the average person to throw $20 in and play around, when you add that and you add the disruptive technology that's on the horizon with not only in the fossil fuel industry, but in the car industry and in energy storage and all these other technologies that are on the horizon, I think those two things really change up the dynamic a little bit. And I don't think it's. I don't know.
You don't think those are too far out, JP?
What's that?
You don't think that those disruptive things are a little too far out? Like, I think that I'd be willing to say that those disruptive technologies with batteries and electric vehicles and in green energy, I think that's those are going to be the things that pull us out of the recession or the depression. But I don't think that they're established enough right now. I mean, I think that we'll definitely do another episode talking about electric cars and that stuff.
If you look at the stock prices of these companies have only recently begun rising, not because they're making money yet, but they have the products in hand. Right now, it's a production issue. It is not a development issue. The research and development has been done. It's just a matter of increasing production. So once they can hit their production targets, that's when we're going to start to see a real shift in the way the market works. And a lot of these old dinosaur companies, I think are going to find themselves left behind.
Right.
And that means the market cap of those companies move into these new bubbled stocks, if you will, the Teslas and the.
So you're talking about too is your long term, like you're talking about. There's short term investments you want to do that you want to flip, and then there's also your long terms as, some financial advisors are talking about. You say like, there's money in solar, there's money in marijuana now too with. Some legalizations of that as well. There's some of that stuff. So we're getting close to our half hour mark. So before I want to kind of ask you both, what are your I think we know what Mike's answer is already about GameStop. What are something you're looking at for the week of starting on January 25th? What are you looking at?
I mean, of course, GameStop. Yeah, definitely.
Yeah.
Another stock that's setting itself up for another short squeeze, which is unusual to have so many, like more than one stock going through a short squeeze at once, is Bed Bath & Beyond.
Really?
Yeah. Those the numbers there, the short float is it's approaching GameStop levels. I don't know if it'll have the same catalyst of Wall Street Bets, Redditors behind it to buy up all the available shares to drive it through the moon, but the potential is certainly there, and it's looking like it's starting. But for sensible investments, if we aren't talking about literally gambling, my money is going into a company called Sensonics. SEN.
Okay. Well, I'm just pulling up Bed Bath & Beyond, and it looks like over the past 3 months, it's gone up. It's going up.
Yeah.
Yeah. Wow.
But why? Like, I can understand why GameStop is with Cohen, but I don't. I guess I haven't even followed Bed Bath & Beyond, so I can't.
That is okay. This is what the show's for, Mike. You just get some information. See? All right, Bed Bath & Beyond. All right.
I'll look at it this week, but I don't know. Seems.
And so the other one is
not anywhere near as cool as the video game store.
Sensonics.
And what was the other one you said?
Sensonics. SENS is the ticker.
Okay. Sensonic Holdings. Okay. And
so this company is a biotech company, and what they have is they've invented a implantable blood glucose monitor. It goes in your skin, and it transmits via Bluetooth to your phone, and it constantly monitors your blood sugar, and it sends you an alert when your blood sugar gets out of whack. So no more pricking your fingers. This has just been approved by the FDA, and I believe there's an announcement coming in March that it's going into production. The market cap should be something like $6 billion for this company.
For sure.
It's got the potential to hit $90 to $100 a share.
It's $2.30 now a share.
Yeah.
Wow. Okay.
And you really feel like, so that's a long-term hold, right? That's not something that you're like, let's do something.
It's a long-term hold, but I think when the news comes out, once they finally get a date set that it's going to hit the market, this is just now been approved. They've still got to get production lined up and whatever. But I think once they have an announcement that it's going to hit the market, that's when it's going to pop. So yeah, it's good. It's a little bit of a long-term hold. I believe mid-March was when they were going to make an announcement.
Okay. And what do you have? What about for you, Mike?
So the story for me this week, of course, is GameStop. Yeah. I'm holding some of it, and I'm looking for it to go to go universal and blow the heck up. That said, I'm also, we've had some outside discussions about this. I like GM's prospects, General Motors, long term, because I think that, and this is something that some of us disagree about, but I think that so some of the GM's made some really interesting moves that tell me that they're going to be the ones that get electric self-driving vehicles right. They partnered with a company called Cruise that does the software for electronic vehicles and is doing this ride share, this idea of ride sharing, so that the vehicles will, like a car will show up at your house, pick you up and bring you where you want to go, and then it'll move on. So you'll basically pay a monthly subscription fee is my thinking. GM also has a controlling interest in Lyft and Enterprise and Enterprise Rent-A-Car. Lyft, the order that I guess with a ride share.
Okay. Yeah.
And Enterprise Rent-A-Car, and so if you look at the things that a company needs to be able to do to have autonomous self-driving vehicles that show up at your house, pick you up, drop you off, and then move on with the vehicle's day, they need to be able to manufacture and maintain vehicles, which GM has been able to do for a bajillion years. They need to be able to have an app-based way to get those vehicles in your hand, which is where Lyft comes in, and Lyft has also been in this autonomous vehicle market. And you need to be able to, have the infrastructure to rent vehicles out. That's where Enterprise comes in. So I am a big fan of GM, and just the way that I think they're gonna do it.
Yeah, and I think just another tip for for either seasoned or first time investors. Like we talked about, don't go for the brand name. Go for the companies that support the brand name. Yeah. Is good. My hot take for the week is what I'm putting money into this week is Ideanomics. They are basically it's what we were talking about before. They are what did I look? I looked them. I did some research on them. Global company focused on facilitating the adoption of commercial electric vehicles and developing the next generation of. So they're connected to they're connected to electric vehicles. And as I say, I'm trying, finding stocks. There's $3.47 a share right now. So
yeah. Well, and that's so you can also, like, the if you wanted to make a safer electric vehicle bet, it's not GM, right? It's whoever makes the best batteries, or whoever makes the best software for it, because that's what they're all going to take on.
Yeah.
If you want to do a little speculating on electric car companies, I think Canoo is where it's at. I think their stock price is at the bottom, and there are rumors of them. They have deals with Hyundai and Kia, and there are rumors that they're going to be the platform for the new Apple car. If that's the case, we're looking at probably $100 a share.
Wow, and I think they're at $16 right now.
Yeah, they've been hovering between 15 and 20.
Yeah. So this is good. So, just, keep in mind, everybody, is that, when it comes to investing, this isn't a savings account where you get a little bit of like a fraction of a percent every year. We always say that, for investing, put in money that you're not going to miss. So especially during this time when, you're saving money on not going through the drive-through, take those $5 and make it work for you. So
My personal strategy is to gamble in my Robinhood account, and when I have profits that are significant enough, I move them over to my IRA.
Yeah. The same thing. Like, this is what I've been doing with Robinhood is just it's the money that I haven't been spending this year because I'm not
you're not buying dunks on your way to and from work. I've
been finding myself skipping lunch.
Yeah.
And then literally buying an option instead of lunch, just to roll it the next day.
But this is good. So I think so check. So keep your eye on, even if you don't want to, put money into it, keep your eye on GameStop. This is
GameStop's going to be fun to watch this week, whether you have money in it or not.
It's a historical event that we're witnessing, another history making point. So, yeah. Well, thanks a lot, JP and Mike, and we'll chat again next Saturday.